Welcome to Lisa J. Stocks podcast. This is podcast episode number 3. And today I'm going to be talking about investing for women, what you should know. I believe that this is a vital topic that I wanted to take a little time to touch on during this Women's History Month for 2024. So, the landscape of investing is evolving, and 60% of women are actively participating in the stock market, and 68% are diligently working to save for retirement. And this is despite women harboring lower confidence when it comes to their ability in investing. But not surprisingly to me, studies have consistently found that women investors outperform men with returns ranging slightly higher from zero point 0.4 to nearly 1% higher. But there are so many other factors that lead women to have smaller portfolios as a whole. And one of those issues is the persistent gender pay gap that still exists. So, because of this, men's balances are usually up to 44% higher. So, you understand what I'm saying. Women have the potential to be good investors, but overall have obstacles and a lower income to invest. So, investing is increasingly becoming appealing to younger women. 71% of Generation Z, which are people up to about age 23, and 63% of millennials, which is in that next group up to age 34, actively engage in investing activities. And I'm happy to hear that 68% of women are working towards saving for retirement as of 2023. These trends show financial awareness among women. And this shift is going to allow people of younger ages to capitalize on the benefit of compound interest over time. The longer that you have your money invested, the more it grows. As your earnings start to earn earnings, it's like your money is making money and the snowball just keeps getting bigger and bigger over time. So, as I was saying earlier, overall, female investors statistically outperform men. And this could be because they adopt a more conservative approach compared to their male counterparts, demonstrating less aggressive investing behavior, which can then translate into better long term performance as they are likely not to give in to market volatility and chase speculative trends. In addition to this, women frequently do less trading than men, which is where you have a higher potential to run into some losses. So I hope more women get over any fear or obstacles that they have related to investing because I definitely feel that we all have the skill to have a disciplined, relatively safe investment strategy that we can create to build our portfolios. So, even though a lot of progress has been made, women face significant challenges. When we're out in the world, just like with everything else, we have to be ready to advocate for ourselves. We have to know that the financial advisors may not have our best interests in mind when they're trying to essentially sell to us. So we have to go into our planning with our questions, with some research, with some knowledge of the current performance of, for example, the S&P 500 so that you can know what kind of results you are aiming to achieve. But I hope my platform and me being a woman shows to others that it's a role that you can take on, especially if you are single or a mom, or for whatever reason, you are the only person that is going to take on the responsibility of building wealth for your financial future and your families. A part of a group, a women's financial group, and I often read posts in there from stay at home moms who obviously lack access to a traditional retirement account and assumed that their marriage would last forever, but it didn't. And I've seen posts saying, I'm getting a divorce. I'm in my 30s. I feel so behind. I don't have a retirement account. I've also seen posts about women who have asked their husband, can I have a retirement account? And have been told that that's not necessary. The investments are ours. So I've always worked. I've never been in that particular situation. And I know that by working in the home, you're already sacrificing your salary that you could be earning outside of the home in order to focus on the household. But even small amounts add up. So I hope women that are in this situation also know that investing is for them and their partner should allow them and support them in having a retirement account for themselves because they are contributing by taking care of the family. Now, many of us, men and women, we work outside of the home. So we have a 401k or a 403b, some type of retirement account through our employer. But our children are not going to have access to anything like that. So I also want to give moms the reminder that you can take on that responsibility to build wealth for your children. From infancy, if your child has a social security card, you can make strides to open up an investment account for them. For example, a 529 plan or a UTMA account. And go on an investment calculator and take a look at what compound interest can do on a small amount when you stay consistent with it for 18 years. And it's not for every occasion that the investment amount matches the actual gift amount that goes directly to my daughter. But I think Christmas, birthdays, just even on a monthly basis, something is going to go into entertainment on her behalf. And I know for sure when it comes to my planning, something is also going into investing on her behalf. We fit eating out, paying the phone bill, clothing, going out to the movies, so many things into our budget. It just makes me feel good to know that I'm also making strides to contribute towards something that will be of a benefit to us in the long run, not just a life filled of depreciating assets. I love seeing initiatives that are directed towards women because there are, as I've mentioned here, a few additional obstacles that women may be running into that are going to overall impact their long term investing potential. So make sure to drop me a comment and let me know your thoughts around how to overcome any barriers that may be holding women back from moving forward on their investment journeys. And for those of you that don't know, just let me give a quick recap of my investing journey. I've been working full time for over 20 years. And with that, I've always had my 401k. And until just a few years ago, that was my only investing that I was doing. But I've become more interested and knowledgeable and mindful to take a close look at my 401k IRAs from previous companies that I've worked at and get in tune with the rate of return, the growth. Am I on track with the amount that I am saving? Because I need to be putting in the work now in order to have the funds available to me when my retirement time comes around. In addition to that, I've decided to put focus in other portfolios and taxable accounts that I can tap into in early retirement, hopefully. So I work on building those up consistently. And I've taken on the responsibility of teaching my daughter about personal finance and investing on her behalf in a UTMA account and opening up a youth account for her to invest herself, know how to use a debit card, understand what a credit score is, and how to be responsible with credit. Making these strides so that she doesn't have to go through, hopefully, she will listen and not have to go through all of the obstacles that I did, running myself into debt that I then needed to take 7 years or so to dig myself out of. Not having a plan on how to pay for college, books, whatever I needed. I'm trying to be here for her to support her in planning and have a solid start to life and being financially stable, potentially financially free at a much earlier age than I was. So I hope you enjoyed this quick episode. If you're not already, don't forget to like, subscribe, and share a comment. Remember that the journey towards financial independence comes with education, empowerment, and taking action. Do your research, make a plan, and be consistent long term, and you will see the results. See you soon on the next episode. Thanks for listening.